All right. Good morning, everybody. Today is September 10th. Special day for me. It was my father's birthday. So I always remember my father. Uh, he passed away in 1979. So it's been a long time, but I always recognize, remember giving him some thoughts. All right. So the market is down again today. And today's also going to be a very choppy trade because, we're in the middle of rollover. When you're in rollover, so for the people that are novice who've never traded futures before, it's when the front month expires. So the month that we're trading now, SEP, expires, and then we get a new month, which will be the new front month, which is what now, January? We'll take it.
December.
Yeah, December. I'm sorry. So I just want you to know that what that means is that the volume starts getting distributed between the front and the back, and so that not all the orders always go into the pit or into the electronic. I am talking about the pit again. So anyway, rollover typically to me was always the choppiest trade, and it's also why we're getting these directional trades. We've got this. We had these two big days up, and now we've had we're taking it back on the next 2 days. The last 2 days, we are down about 1,000 points today. We'll go over that, but I just like to get the. I got my glasses on here, and we will read the disclaimer so that everybody's lawyers don't try to come here and sue me. All right, trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Options, market data, opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results, and the following information is an expression of our opinions and is provided for educational purposes only. All right, so now that we got that out of the way, um, let's start sharing the screen with you, and I'm going to share the old spaghetti screen because it's the one that is dominating what our trading is going, what's all about right now. Okay. All right. So I keep showing you this screen because it's the fact of life. Okay. I wish I could show you something different, but the fact is that we're going to stay in this range. As you can see now, we've poked our head above the 50% retracement from 2134 all-time highs, and this bottom, which I feel like was an important bottom from October of 14. And this is where we actually put the low in over here when we had the sharp down day, I believe, like 2 weeks ago. So let me see. Let's put it over here. So that low of 1831, if you remember, that was the market halt. We have not revisited that. I think we need to revisit that. I'd like to see several weeks of consolidation in this area. And if the market is going to be strong and we're going to go back up, and which I believe it's going to happen, I think we're going to go back up. I think we need to get the Fed behind us. Either do it or don't do it, Janet, but do something. All right. We'll see. If they do not raise rates, I think the market is going to take a big move to the upside. And if they do raise rates, which I really don't think they are, but if they do, you're going to find out that the market will take a knee-jerk reaction to the downside, and then they'll say, "Oh my goodness, a 0.25% basis points is not a big deal. It's not the end of the world." So we have to understand, in this business, we buy what do they tell you? Sell the rumor, buy the fact. Okay, so that's what we're looking at. We're trading in this range, and also today is going to be a difficult day because it's rollover. So some of the platforms, Thinkorswim has not rolled yet, so they're still trading the SEP. Okay, so let's take a look at what we have here on the overnight action. Let me bring in the profile first. Okay, overnight action, we put in a high of 1957.75. We put in a low of 1919. Let's call that 1919 quarter. All right. And right now we're trading basically at 1936. And both of these on the top and the bottom are unfinished. So this is telling me we're going to get a two-sided trade today. Two-sided trade. All right. And we are still holding above the short session of Friday with the lows. You know, we went down and we retested back down here now, right? Okay, this is our Friday, and then the shortened session. So we are now back above the 1930 area. So this is just telling me right now, get ready. We're going both ways today, up and down. So look for failure. Now, right now, you're looking at a trade that you would have to take from the middle. So the way I look at that is we need to be able to look for failure. All right. Actually, when you get moves out of the middle, they become, you know, pretty predominant moves. But, you know, what are you going to do right here? Flip a coin. We're going up. We're going down. You have to be able to watch and observe the market and get an idea on failure on either side or confirmation of up or down. So that's the way I would be playing it. Taking a look at today's market. So we have from yesterday, okay, we've got a value area high of 1980.75. We've got a point control of 1970. We've got a bull bear zone of 1955, and we've got a 1915 a quarter, the bottom of value. We're trading down here at 1936. 1936. All right. So, you know, looking for a move back into value this morning. Okay. And then a failure up at the top, and then maybe back down this way. So we you know, these are the things that you know, we got to be able to trade on both sides of the market. Right now, the market sentiment and the 15-minute pivot, we got it right here. We just took it out. Okay, we took it out here, and on the 15-minute pivot, we are in a sell. We are in a sell. So I go to the 5-minute pivot, also right here. Okay, which is 1944 and a quarter. As you people learn, the people have been around me now for about a year and a half, understand I do not trade against my pivots. If the pivot's in a sell and I'm not comfortable with the sell, I wait for confirmation. All right, I wait for a possible rally to the pivot and a failure up at the pivot. Okay, so I'm taking a look now at the sisters. I'll bring those in here in a second. So we've got all. So here's the Russell. As I bring it in, as you can see, it's in a sell. Here is the TF in a sell. All right, and then right here we got the Dow. So I'll give you those numbers. We put them on all the time. So the 5-minute pivot in the Dow is a 259, and the Russell is 1146.40, and in the Nasdaq, I'm sorry, right here is at 4257.29. So I need the markets to get above there to turn their 5-minute pivots into a short term, the short term sell. So, however, the thing that's really gonna skew trading today is that we're in rollover. So remember what that means is that we're going to start putting volume in the Dece month and less volume in the current month of September. Okay, so now also take a look at where we're starting from. All right, and these are the things you got to learn. Yeah, right? We're starting from the middle of an overnight distribution of a high of 1957, and we got a low of 1919, basically. So when I'm starting in the middle here, I'm not going to guess. I know I'm going to get a two-sided trade today. Right now, I've got the the market in a bear territory. But the problem is that when you have rollover, you don't know if the buyers are going to come in because they're trying to roll their short positions into, or I mean, sorry, their long positions into the D's, or vice versa, trying to roll the volume. So this is why rollover always is the most difficult time to trade, because of the because usually what the institutions do, they do it in a wave. So they either coming in all buying and all selling. So we gotta understand where we're starting from today, that we're starting from a middle, and we need to look for extremes and failures. That's what I'm looking for today. All right. So taking a look at the other markets, I did not get to put the value areas in, but it looks like based on this, the bonds are basically trading a little bit above value, and still sort of nowhere, you know, in a range between 52 down here up to 56. And I think that the bonds are just waiting for the Fed, and if they're going to make a move from last week or next week on the 17th. And everybody's precious metal is put in a low yesterday, excuse me, down here. And I'm sorry, this is oil. I'm sorry, this is oil. So oil, based on looking at this, may be trading above value based on where the trades were yesterday. I'll get this stuff out and put it on Twitter. But, you know, oil went down and made an overnight low here. Pull it up. Looks like right in here, okay, of 43, 30 something. So, you know, oil is going to be stuck, right? I think it's stuck between, if it can't get back above the 50 again, and I think the market is still heading to the low 28, I'm sorry, low 30s to 28. Now, this is all going to be also going to be a function if the Fed decides to raise rates. Stronger dollar, oil. We have petrodollar, so oil is marked with the U.S. currency. I just think that you know, with low output, I'm sorry, overproduction and a stronger dollar is going to be not a good scenario for oil. So we got to see what happens if the Fed raises rates. If, you know, if they raise rates, the dollar becomes more attractive. Gold making a little bit of a rebound. It's up 11 bucks, right? And it made an overnight low of $1,100. So I guess people are actually making that play for under 1,000, right? So only $100 from there. So gold, once again, like I say all the time, it's a demand product. And right now, with zero, you know, with no inflation, the hedge against inflation is not there, so there's no demand for buying gold. Also, I think that the other side of the coin is there is a demand for with a strong dollar, that you know, people that do own gold are using gold to dump the gold to generate some cash. So that's another issue that's going on. And also remember, gold is a commodity that you have to put in storage and pay for, and you're earning 0% interest. So if they do raise the rates, and there is the ability to derive some sort of interest rate from a Fed fund, I think you're going to see the price of gold go down, because they can sell the gold and get and put your money in dollars, which are getting stronger. So that's another issue that's going on. All right. So once again, remember, it's a rollover, and I think that this market is going to be a two-sided trade based on where we're coming from. All right. We're starting in the middle of the profile. Anthony, got any questions typed in yet?
Yes, Jordan wants to know that you said yesterday on the profile you showed two letters side by side. What did that mean?
All right. So, and when I talk to you about a trend day, okay, And I think I have to
I
reset.
think we had unfinished top, huh?
No, I was talking about yesterday's trend day.
Oh,
Okay. Let me see here. All right. Let me. So here's a normal distribution, right? Like here. Okay. You see letters, a bunch of letters, right? If you look at start on the right, it goes T, W, X, Y, Z, so on. And when we get trend days, and yesterday when we started off the day, as you can see right here, okay, it started out with a B, and then it was a C, and then, you know, let me kind of separate this so you can see this. All right. All right, I'm going to separate because now we're going to go back to the first hour of the day. All right, first hour and a half of the day. So, and I think what's the problem here is that I switched this chart off. Let me do this and do a force reset. All right, let's get all the data in there that's correct. All right, hold on with us for a second here. What I'm doing is rebuilding the data to make sure that it's fresh, okay? All right. And now I'm going to reset the daily splits. Okay. And then I'm going to go to yesterday. All right. And I just want to get the day action. So I got to go to letter B right here. Okay. All right. Now, so remember, we start out with B, C, D. Okay. Let me split it right here. Okay. So as we started out the day yesterday, and the other thing I have to do so you can really see the difference is I have to go up to the chart parameters. And I'm going to make this fit 25 cents because that means that, you know, we move in 25-point increments. All right, so that should help us understand what I was talking about yesterday. Okay. All right. So take a look at the first hour and a half of trading. So you got bracket B, bracket C, and bracket D. Okay. So when yesterday when I said to you that it looks like it's a trend day down, this is usually you had an opening. Here's the B. We opened up and we went straight down. Bracket C opened up. We went down. Bracket D opened up. We went down. So this is what I'm talking about on a trend day down. You have only one letter. Here's two letters, B by BC, 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 two letters, CD, CD. All right. Not till bracket D, okay, did we start getting consolidation. Okay. So this was the beginning of a trend day down. On trend day down, you don't get all you get is in the first hour and a half are a one letter and two letters side by side. All right. Then we got consolidation. And then yesterday was a typical trend day down. A trend day down, 80% to 90% that you will close on your lows. Look at this. Bracket N and P. We went and put these lows in on the close, and it started from what we call a trend day down. So when you hear us put out, it looks like a trend day formation, this is what we're talking about. So we got this consolidation during this time period, and then it continued to close out on its lows. All right. So that's what we're talking about when we talk about a trend day. Hopefully that answers your question.
That's it.
All right. Any other questions?
That's it.
All right. Everybody get ready for a kind of volatile day. We're going to have, you know, not only do we have the volatility of what's going on, there's a lot of numbers out today, but besides that, You got rollover, which always makes it more volatile, and then the fact that we are in very expanded times of volatility right now. So you have to, you have to pick your shots. You'll have a couple opportunities to make some dough today, and stay with us on Twitter. I mean, yesterday we kind of called the whole break, gave you targets, and if you stay with us, you can make some money. All right, everybody. Good luck, and we'll talk to you later. Bye.